David George joins me now. David, good to have you. We're through the bulk of bank earnings season here. Thematically, what would you draw out of what we've heard, and what are investors reacting to today in finding some value in them?
Well, good afternoon, Mike, and a couple things. In terms of the results themselves, I would characterize them as stable, which, given the sentiment towards the group going into earnings, we think is a good thing. If you just kind of take a step back and think about the drivers and fundamentals, deposits have been stable. Net interest margins are starting to show some stabilization as well, and should show a bottom or an inflection over the next quarter or two. Probably the most important thing, Mike, in kind of the initial bank earnings takeaways is that credit quality, for all the concerns about commercial real estate, office, and the consumer, credit quality continues to be very good, and capital continues to show improvement as well. So given the poor sentiment and positioning going, and we think market participants are very underweight, particularly regional banks, that we think that there's a lot of positives from our standpoint, at least looking through the earnings so far.
You mentioned credit looked fine, I suppose. Now, a lot of, I guess, credit card loss rates have been migrating higher, not necessarily to alarming levels, but that's been a trend. On the commercial real estate side, when it comes to a lot of the regionals, have they worked their way past it? In other words, they've been kind of able to obviously build book value and earn some money along the way and then take losses as necessary, or are we still waiting for the real hit to occur?
Yeah, so on the commercial real estate side, I think this is going to be a very long tail. If you're waiting for a clearing event, it's going to take a very long time to do that. And fortunately, that's actually a good thing for banks. And we're of the view that the CRE office cycle is going to be problematic. However, it is going to extend over probably a 3 or 4 year period of time as lessors renegotiate their rents and you start to get some semblance of price discovery in the CRE market. The good news is, Mike, that banks have the benefit of pre-provision earnings to pay for those losses over time. And as a reminder, several banks have already taken very significant losses and reserves in commercial real estate portfolios. Wells Fargo's over 10%, PNC's over 10%. Citizens, M&T are both in the double digits as well. So banks are very well prepared, in our view, to deal with, obviously, the well-publicized issues and concerns that the market has around CRE.
And what are some of your preferred names at this point, now that we've heard from most?
Yeah, our favorites right here and we've really been focused on the regional banks more broadly relative to the money centers. And our favorites are Comerica, Truist, Key, Huntington, and PNC. We think all of those names trade at fairly good valuations and the risk-reward trade-offs. And again, a fairly expensive equity market broadly. We think that these stocks provide a pretty good margin of safety and reasonable upside over the next 12 to 18 months.
And what can you say about the sensitivity? I know it varies by bank, but to the fact that maybe short rates are going to stay here for a while longer than we thought.
Yeah, obviously market expectations around rates, Mike, have really moved a lot over the last 90 to 180 days. And fortunately, on the deposit side, that's really the key. We have not seen the migration or movement of deposits that we were all worried about a year or so ago. So that's a good thing. Banks are by nature asset sensitive. So the higher for longer is not a huge problem. It probably will have some knock-on effects as it relates to credit quality. But again, from our standpoint, again, given where the valuations are, the rate backdrop from where we sit at least is pretty manageable today.
Yeah, obviously expectations had been chopped down pretty low. We got Truist coming on Monday. David, thanks very much. Appreciate the time today.
Thanks, Mike.